I'm going to update you with the latest Goldman Sachs report for its hedge fund client, showing us what the hedge funds are doing for the week ending on December 13th for US equity. And let's first take a look at the leverage. So US fundamental long-short strategy growth leverage can be seen over here. It's currently at 196%. It's 84th percentile in 3 years. Okay, in the chart, gross leverage is shown over here, and it's on the left hand side. That's where you look at the percentage, and in terms of the change, week over week is up 3.9%, month over month up 7.2%, and we have the year to date is minus 0.9%. And if we look at the net leverage for the fundamental long-short strategy, the net leverage, we're having a 56.1%. And this is 87th percentile in the past 3 years. And in terms of the change, week over week, it's minus 0.3%, month over month plus 0.1%, and year to date is plus 3.7%. So the US fundamental long-short strategy, the long-short ratio, we have 1.802, and it's shown on this chart over here, and this is the 68th percentile in the past 3 years. In terms of the change, week over week is minus 1.6%, month over month is minus 2.3%, year to date is positive 4.4%. So in terms of the trend, I think what's very interesting is for both the growth leverage and the net leverage, it's at a pretty high level for the past 3 years, okay? Especially for the net leverage, okay? We're currently over here, if you look at the past 3 years, we're at a pretty high level. And the long-short ratio is pretty much stabilizing around here, around the 1.8 range. Now, let's look at the US equity flow data. We are seeing December over here. This is the second week of December, so it'll be somewhere here. And we're seeing the second straight week of net buying for US equity for hedge funds. It's a plus 0.4 standard deviation for the past year. And the long buys outpaced short sales with a ratio of 1.4 to 1. And the macro product is pretty much index plus ETF. Represents 54% of the notional net buying is plus 0.2 standard deviation for the past year, and the single stocks made up of 46% of the net buying is plus 0.3 standard deviations for the past year. And the most net bought sectors within the single stocks, we have financials, consumer discretionaries, and energies. Okay, and the most net sold in the past 5 trading days or the past week is materials, healthcare, and industrials. Now we have to pay attention to the financial sector because it's the most net bought sector for the week. It's plus 2.2 standard deviations. It's driven primarily by long buys. The financial long-short ratio was 1.74. For the past week, it's 89th percentile in 1 year. Okay, and but it's only the 20th percentile in 5 years. Now this chart shows you the percentage on the vertical axis. It shows you percentage of sector net market value at start of 2024, and this is the start of 2024. Of course, this sector is the U.S. financial sector, and as we can see, we're currently here, right? So from 2024 year to date, it's at a very high level right now. Okay, and the reason why the U.S. financial sector is doing so well is because there is anticipated deregulation, and it's also expected to see an increased deal-making activities for mergers and acquisitions, and we're also expecting a strong economic strength in the future. Thank you very much.